Hey, good morning, gang. So happy Thursday. Kind of interesting morning this morning, right? After yesterday's Fed talk. And this is what I've been talking about. Look, the media is criminal. It's an enemy of the people. I've said this before and it's proven again. Remember in December and January, we're all pounding the tables telling you buy those high value stocks, buy those high value stocks. Well, then along came the gut drug dealer, right? I've used this analogy many times. The Fed is like a heroin dealer, the market is like a heroin addict, right? Every time it gets lethargic, a little bit of down, needs some of this stuff. What happens is the Fed comes around, gives a little shot. But what happens after that? It wears off and then we back into the lethargy. We're in a very sideways market right now, guys. You can see it, right? We have big up days, big down days. It's very difficult to trade. Options right now, right? You have to be very patient. You have to be very deliberate. We just cashed out a VIX trade yesterday, day before yesterday, for about 45, 50%. Nice little trade. And we still only got two or three trades on the board. The main one being that ET options we bought out to July. We catch a little bit of this growth as far as the reopening trade is what it is on that energy. But other than that, guys, we're just kind of being very coy right now. Other than that, what we're doing is we're doing exactly what I've been telling you guys. Build good stocks with good balance sheets, with good dividends into your portfolio. Do it when we were been talking about the last 2 months. Do it now, because when it goes into a sideways market, if it shifts down and stuff like that, those dividends and that compounding will protect your portfolio better than any management you can do, guys. This is the secret that Wall Street doesn't want you to know. You don't need a financial manager to understand compounding. It's a very simple thing. You buy something, it compounds, and you get rich. You don't have to do much else. But it all starts with those great stocks. Speaking of great stocks, this afternoon we got another stock of the week. You guys are going to really enjoy this. We usually release it on Tuesday, but this is I guarantee you nobody's ever mentioned this stock in ever. In fact, you'll be shocked. But once you see what I have to say about it, and once you look at the chart and stuff, I think you'll agree it's a worthy addition to any portfolio. All right. So look, guys, we got the Fed statement yesterday. The statement basically said we are going to continue to buy 2-year treasuries hand over fist. We are not worried about inflation. We got it under control, and we are not going to raise rates till 2023. There's a promise in there, and that is the danger zone. Uh, Personally, I think we raise rates by the end of the year. That's my guess. You take that for what it's worth, but I just can't see. We had that bad unemployment report. We're opening up the economy, but people aren't going back to work. There's always that theory behind that this stimulus, with the addition to the unemployment payments, has created a workforce that it's more lucrative for them to stay home than to go back to work. Uh, you can debate that, you know what I mean? And really, that's a fun debate, but all we want to know is people aren't going back to work. uh, it's an interesting situation, guys. What's happening right now is you saw your 10-year rate overnight. It went back, it went over that 1.7, and it held that 1.7. It wasn't like when it bounced from that 1.4 to the 1.6. Remember, it didn't hold that 1.6. This time it bounced and it held. The problem right now, guys, to keep it very simple, you don't need an economics degree in this situation. Rates are growing faster than the economy. What that means is inflation is growing faster than your labor, and that is not good. Uh, so you want to be defensive, and that's why I tell you, check out those stock of the weeks, guys. They're good stocks. We own them. We don't ever recommend anything that we don't put our money into. Unlike everybody on CNBC, it's always funny, right? CNBC. I know I started this out with the media thing, but you think about it, right? You watch these guys on CNBC. They sit there and they tell you, this stock is a great stock. It's going to double. It's going to do this. It's bad. And then they show the little on the side. They always show whether they own the stock or not, right? And it shows whether their family members own it, whether they own it, whether their company owns it, right? And it's always no, no, no. You know what I mean? They'll tell you to put your money there, but they won't put their money there. You know why? Because they're lying to you. Jim Cramer was the happiest person on the planet yesterday after that Fed announcement, right? He said, Jerome Powell did the right thing. No, he didn't. No, he didn't, guys. And it's starting to show in the market. Let's go see where the market's at right now. Because it's been an interesting market, guys. Let me pull this up for you guys. Get a nice chart here. We'll start out with the comp. Okay, guys, I'm ready to share screen here. Let's share a screen. And we're on. Okay. So if we look at this chart, this is your NASDAQ chart, and we've kind of channeled it, right? We went back on data and we found this channel, and you can see it's playing out true. This is what I was telling you guys about a sideways market, right? It'll hit a top, it'll come back down, it'll hit a top, it'll come back down. Right now, if you want to play real short term, you look how many days it takes to get to these points, right? 2-3 days, 4 or 5 days. It's very quick and very moving. You can play those short contracts if you want, but they're very dangerous. Remember, with that short expiration, man, it's either hit or miss. We don't trade like that, especially in options. You guys know we always give ourselves a little bit of time. Other than that, guys, let's pop on over to this S&P chart. The SPX. This will go straight to the source. Here's one. Now, the S&P over the last few days has broken to a new high. So let's see if it holds that or if it comes back to the channel. What we can do here for you chartists is we move that bottom bar up, and now we have a new top. Okay, and let's see whether it floats within this channel here, the previous high and the new high, or if it comes back and gravitates into this cluster right here. The Dow is up. We've been telling you why the Dow is up. The Dow is up because the value trade has come back on the board. What is the value trade? Tea, Coca-Cola. We're short Coca-Cola right now, so we're not happy with the value trade. But tea, Coca-Cola, what do these things have in common? Your utilities, your Dow 30, like your Caterpillars and stuff. Exact same thing that we've been telling you about, your best defensive mechanism in a bad market. And that's strong balance sheets, strong dividends, right? These companies will recover. Even if they get hit on the stock price, when it's down, it's depreciated, your dividends are buying the bottom for you. You don't even have to do anything. It's very passive. And then when it comes back, guess what? You've got a big old nice position and you're getting that price acceleration. These institutional managers see this, the writing on the wall, and that's the way they're moving. I know they're on CNBC and stuff telling you, like your Kathy Woods and stuff, telling you buy more of these overvalued stocks. But the truth is they're moving their money into value. That's what they're doing. Everything's overvalued on the NASDAQ right now. Everything, even Apple. Apple is your indicator right now, guys. If you want a very simple way to judge this market, Apple is telling you the whole story. Remember, Apple is one of probably the best balance sheet on the planet, but it's been getting beat up over the last, it's not jumping on rallies. It's not really selling down on sell downs. It's just kind of floating around. You know what I mean? It's a great dividend. It's a great balance sheet. I mean, these people, they have tens of billions of dollars in their bank account cash. There's no reason you shouldn't own Apple. That's always the answer I give people. They always tell me, why should I buy Apple? And I always tell them, why wouldn't you own Apple? And remember Warren Buffett saying, right? I believe it was either him or Munger said this. It's never a bad time to buy a good stock. It's always a good time to buy a good stock. So don't worry about market levels and stuff like that when you're setting up those big, good stocks in your portfolio. Again, go look at the stock of the weeks and check out today's. You guys are going to get a kick out of this one. I know I did. But look, other than that, guys, let's see how this market shakes out. The Dow's up about 64 points. The NASDAQ's back down under 200. over 200 points down. The S&P is down about 0.5%, about 21 points. Let's see how it shakes out going into the weekend. Again, on top of everything else, we got a bad unemployment report, bad labor report. Really, just to kind of sum up, guys, that's where we're at right now. Inflation is growing faster than your labor market. And that in a high growth situation is a bad combination. Now you had your Fed come out and make a big promise. No rate hikes till 2023. My God, we are in the first quarter of 2021. I'm glad he has this crystal ball. But I'll say it again. I've said it before. I bet money that we have a rate hike before the end of the year. And we'll see. Okay. We'll see how this goes. We've got debt to consolidate, right? $2 trillion debt stimuluses here and there. They're talking about trillions more for an infrastructure package. They're talking about tax hikes on the upper levels. It's interesting. Tax hikes. I think anybody that's over 15 years old knows anytime they raise taxes, it hits everybody across the board. I don't care how you place it. So let's see how it shakes out. Okay, guys, that NASDAQ's kind of trickling down as we speak. Youch. If you're Cathie Wood. Now, look, let me close with this for you guys. Now, I always try to give you guys, now, if you join the membership, you get the picks and stuff like that. But I always try to give you guys in the lab and stuff on YouTube, just very sensible, very useful information, right? The smart way to do things. Let me mention Cathie Wood a little bit from ARK Investing. You know, she's deep in tech, right? Like yesterday, I'll show you the article. Let me see if I can pull it up here. This is kind of interesting this way. Sorry, I'm keeping you guys so long today. Let me share screen here one more time. So if you look at the CNBC, right, you see over here, Cathie Wood scoops up more Teladoc after shares dive on Amazon. A few days ago, what was it? She was buying Tesla, right? Because Tesla was hit the skids. That's dangerous, guys. Don't do that, okay? Don't do that. Don't buy down the ladder just because you like a stock and it gets cheap. The smart way to do it is the way I'm telling you guys, is you buy a great stock, right? Apple, you buy it at 135, right? Now it's 122. Oh my God, I better buy some more if I like it? No. If you've got your proper position, about 2% of your portfolio, maybe a little bit more on a heavy stock, a good stock like Apple. But all you do is keep those dividends reinvesting, right? And as long as it's down there, we just had a dividend from Apple at a nice low level. Let the stock work for you. Don't try to manipulate. Let the stock work for you. That's the whole point of what we do. Is we're wealth builders. We're not light. We don't follow the blinky lights and stuff. We want to build wealth over time. So that's your best defense. Don't start throwing money, good money after bad money. Okay, guys. And even when you first buy a stock like an Apple, at first it could be bad money, right? You buy it at 135, it goes down to 120, it sits there for a couple months, but it turns into good money on its own. It creates its own good money through those dividends and through that powerful balance sheet. The market comes back, it will come back with the market. Right now, Apple is your barometer for the market. Let me just show you one more chart here, guys. Excuse me. Let's look at the Apple chart. You can see that Dow, it's gone red, it's gone green. That's your value trade. But let's check Apple real quick here, guys. Everything in this market right now, especially the S&P 500, is all about Apple. When Apple picks it up, things will start really screaming for there. You see, when the S&P 500 just made its high, Apple was trading at the top of this level. Apple is the barometer right now. So you keep an eye on Apple. If you want to see which way the S&P 500 will not be able to hold those highs without Apple participating. Okay. That's black and white. There you go. So look, guys, let's call it an update, because this is kind of a long one. Don't forget, I'll release the stock of the week this afternoon, and tune in. You get, if nothing else, you get a kick out of it. Okay. I guarantee you nobody else has featured this stock before. Anyways, guys, you have a great morning. Okay. The Dow just went red. The heroin's wearing off. I'll talk to you guys in the morning, or see you guys at the stock of the week later.